Confidence among U.S. homebuilders in June hit its lowest level since December 2022, as high mortgage rates and policy uncertainty hit would-be buyers. With more on the landscape for homebuilders, we have Katie Hubbard, Walton Global's Executive Vice President of Capital Markets, joining us now. So, Katie, there was actually an expectation we would see sentiment rebound here. Clearly not the case. What does this tell us about where homebuilders and really the overall housing market stand right now?
Yes. Hi, Allie. Thanks so much for having me. So homebuilder sentiment dropped to 32 from 34, went down slightly. We were expecting it to increase. However, that is surveying over 400 homebuilders across the U.S. And our clients, Walton, we have public homebuilders as our clients, and they're definitely not seeing that negative sentiment. But if you're Bob the Builder and you're not able to have the same really tools in your toolbox as public builders buying down mortgage rates and offering incentives, then your sentiment is definitely down because affordability and just consumer confidence is keeping people on the sidelines.
And overall, the outlook here has been cautious, and you pointed to some bumpiness in the home builder data over the past few months. What will it take to reach that full rebound? Is it more clarity on tariffs? Is it a step down in mortgage rates? All of the above?
It really is all the above. I mean, right now we're seeing an all-time high of 27% of people aged 25 to 34 are now on the sidelines. We have 650,000 people in that age group that have, since 2023, moved in with their parents or grandparents, and another 250,000 25 to 34-year-olds have moved in with roommates. So they're really on the sidelines waiting for rates to come down, just that consumer confidence. And so it's keeping people on the sidelines. But the fundamentals of demand, the demand is there. It's just what we're seeing is that the large public home builders, it's not as much of a problem for them on the on the home builder confidence. They're going to build through this cycle. They've learned in past cycles that if they pull back or they lose any land positions, the demand is still there, so they're going to go through it. What's happening, though, is smaller builders that can't really compete, they're probably going to be the ones that are turning in the keys, and they're going to be selling to the large public home builders. But we really need, rates to come down closer to 6. They're now today at 6.72 on the 30-year fixed, and that's just keeping people on the sidelines.
So demand is still there, but where are you seeing the biggest cracks? You mentioned some of that younger cohort of buyers. Is it more entry-level buyers that are staying on the sidelines at this point?
It really is, but if you go into a public home builder community, they will buy down your mortgage rate. And so if the mortgage rate is the issue and you go into one of those communities, they're going to do anything that they can. Even going to 0% margins and really building the house for practice to get that home sold. So it's really pace over price for public home builders. And then on the flip side of that, the positive is you've got 55 plus communities are doing very well. We've got 12 million people that are going to be hitting that 55 plus age bracket over the next 8 years. And that's where the wealth is. There's $112 trillion in wealth locked up in people born before 1970. And that group of people, they're really going down, selling their houses and going into smaller houses. They want to go to master plan communities with amenities like pickleball courts and, wealth and health and wellness. And it's not like, our grandparents, it's a different type of generation at that 55 plus where they're healthy, they're wealthy, and they're tech savvy. And so if you're a builder that can build amenities to that genre and that group of people, then you're also going to do very well, similar to the entry-level home builders. But if you're in that middle bracket, building 5,000 square foot houses on acre lots, those are the groups that are really struggling.
Yeah, gotta have those pickleball courts. And what about regionally? Are there certain pockets in the country that have higher demand, or that maybe there's some more pricing power there?
Yeah, absolutely. You're seeing affordability is really the key. So people are going to markets like Sacramento, Portland, Minneapolis, where there's just affordable homes, and that's really what's driving the places that are still doing well. Places like New York and Boston, people are just priced out.
And then tariffs, obviously the big TBD factor this year. What policy moves, whether fiscal or regulatory, would really help move this housing market along?
Yeah, so our builder clients were really expecting about a 6.8% increase in materials. Right now, they're reporting only a 2% increase. And so that has been a positive, but deregulation is going to really offset any tariff increases. So they're looking forward to deregulation with the current administration that will drive down prices, because about a third of the cost of a new home is due to red tape and overregulation.
And given your vantage point as a land investment firm, are builders showing more interest in grabbing that land now to really feed some of that demand that remains out there, or do they want to wait for a little bit more clarity?
Absolutely. There is a land grab to control the land. So if you're able to really scale your operations, secure capital, and then option your land, doing institutional land banking like Walton, you're going to be in a better position as you build through the cycle, because on the other side of it, when you have the land that has not only the amenities, but the zoning, and you have the ability to build on it, those are the builders that are going to do better on the other side. And they understand that. So in the last, the great financial crisis, the home builders that dropped their land, and on the other side of it, they wish they hadn't had they've learned, and that's really the large public builders are the ones that are out doing the land grab, and they have the capital to do that.
All right, we'll continue to watch the evolving landscape, quite literally, of this housing market. Katie, thank you so much. Appreciate your time.
Thanks, Allie.